Caltex, a proud heritage and powerful brand. Over the past 75 years, our look has changed, but the impact of our brand has continued to grow. Formed as a joint venture in 1936, Caltex capitalized on Chevron's Middle East oil supplies and Texaco's worldwide markets, extending from South Africa to China, the Philippines and Australia. Over the next years, we continue to grow in emerging countries, supported by strong customer-focused products like Caltex with Techron. In 2001, when our two parent companies merged to form Chevron Texaco, later renamed Chevron Corporation, we continued to inspire consumer confidence as a major international brand and symbol of trust. Another thing that hasn't changed since the beginning.
Global appearance. Caltex operates the largest oil company retail network in Australia. However, the supermarkets Woolworths and Coles have a larger market share than any of the oil companies operating in Australia. Caltex overseas presence includes New Zealand, China, Hong Kong, Malaysia, Philippines, India, South Africa, South Korea, and Taiwan. Financial standings. The stock of Caltex topples by 4.4% to $31.83 and made it the third worst performer on the index in Australia. The share price of Caltex Australia crashed when management posted its first half outcome, and with lowest profit margins it disappointed the investors. The company interim dividend is another reason for a huge fluctuation in the share price, as it also lowered by 3 cents to 57 cents, and that is mainly the part to big drop in corporate costs, accounting and financial framework. Caltex Limited follows its objectives, which are to ensure high quality, to maintain understandable and globally accepted financial reporting standards, to promote the use of rigorous application of those standards, and to facilitate the interpretations issued by IASB. Sustainability and management approach.
Our brand's fundamental qualities of agility, professionalism, loyalty, customer service, and social responsibility.
Caltex introduced 5 core values, which are all better version of their previous stated values, showing the power of their organizational culture and also motivating them to change in a positive manner. Connect to win. Find new ways. Own it. Make a difference for customers. Last but not least, never stop caring. Social and environmental reporting.
Our social responsibility to help people realize their dreams, from South Africa to Australia to Hong Kong. Our people are at the heart of a business that spans many countries, all with their own unique Caltex heritage to tell.
Caltex's businesses fall within the range of environmental laws and regulations, as well as project and site-specific environmental licenses and approvals issued by each federal and state government. The international operations of the businesses, including shipping activities, can jointly work to meet the terms of any further international or applicable countries' obligations. Ethical reporting. For the third consecutive year, Caltex has been awarded Employer of Choice for Gender Equality by the Gender Equality Agency Workplace, as Caltex is always committed to heterogeneous and effective practices in their organization to promote the gender equality. As well as currently, Caltex is focusing on to provide their employees sustainable jobs and good growing opportunities to make them life better and provide them ease. Controversies and related issues. 76% Caltex audit franchises found to be underpaying workers. The Fair Work Ombudsman audited the 25 stores, and FWO's investigation found a 76% failure rate in 25 stores. a figure that would do nothing to help the Caltex brand, which has already been tattered by a wage fraud scandal exposed by Fairfax Media in late 2016. Recommendations and conclusion. Caltex must take serious actions in solving their issues and controversies regarding what it franchises to be underpaying workers. It must make a secure pathway for its workers. It attempts to stamp out wage underpayment. The company must take in note all the aspects for countering its competitors. So the overall conclusion is that the company analysis can tell us that their shares are recently fallen out of benefit, but the brighter side expected is growth assumptions and new policies which are promised by the company.